We're all for decongesting the roads and having it at a very lower cost. That, of course, is going to help the economy and economic movement and activities, and we hope to see it become a norm for us. Now, let's talk about commodities. It's Commodities Day today, and we have joining us Senior Manager at Financial Derivatives Company, Dumebi Oluwole. It would be good to have you in the studio, but Dume, we have to just manage and have you virtually. Good to have you on the program. You're welcome.
Thank you, Ini. Good to be here.
Great. So I think the first thing that I would like for you to touch on is the issue of we see Brent declining in price in a couple of days now, especially since the new surge of tariff came on. But then we noticed that from, I believe, since yesterday, Monday, at least in Lagos, we've seen an increase in the price of petrol. What's going on?
Yeah, so I think it's a very important question because people are obviously concerned about why the price of petrol is rising again. So I would say two things. The issue right now is split two ways. The first one is that we are coming from a period where petrol prices have crude oil prices have actually been rising. So almost all through the month of July, we did see we did see Brent crude, significantly increase. At least between June, at the end of June and the end of July, we did see a 7.7% increase. Brent crude was trading at around $62 per barrel in June, and almost towards the end of July, it had inched up to about $72 per barrel. And one thing to always remember is that a lot of the refined petroleum products that we import into Nigeria are bought in, forward contracts, right? So most of the money spent to purchase, the refined petroleum products were spent at a higher cost, and so we are experiencing that right now. And there's also that lag from when the product is purchased and when it eventually gets to Nigeria and when it is eventually sold. And a very important thing to also mention here is the new price structure that we are currently faring in right now in Nigeria's downstream petroleum sector, and how that feeds into cost reflective pricing for independent oil marketers. The other
Maybe you should tell
aspect
us
of
a
it
little
is,
bit more about that new price structure and help us understand so we can know what to expect.
yes. So the change in the market structure is pretty much what we have been experiencing with diesel prices, right? And it's the only difference now is that it's more mass because most people use petrol compared to diesel. And the change in the price structure, change in the market structure pretty much is that prices now will be more cost reflective. So what that means is that the subsidies have been removed, and so the true cost or by which marketers are incurring or operating or even getting their produce to sell into the domestic market, and that cost, which is inclusive of the naira's movement, currency movement, logistics cost, most of all of which are priced in the US dollar, right? All of that feeds into their costing, and then and that now feeds into the price of the product. Earlier on in the market structure we were living in before or operating in before, subsidies were the buffer for that actual cost that independent oil marketers were experiencing. And so we were getting lower prices, right? Or we're getting adjusted prices because someone else, which was the government or the NNPC, was paying for, right? So that they would give the independent oil marketers their full money, and then we would pay a subsidized rate. But right now that buffer is out, the true cost at which oil supply petroleum product suppliers get their produce is going to definitely be reflected in their price. But the other thing I wanted to mention regarding the current situation is that we are also experiencing high price volatility in the oil market. And when you put that side by side with the tariffs you had already mentioned earlier, and the fact that the US Fed is still very hawkish, what we have is a stronger dollar, right? And when you juxtapose that with how commodities, global commodity prices fare with a stronger dollar, right? You see that when you net it off, we are currently experiencing all marketers, their cost pretty much has not changed from when oil prices were, higher. So even though in itself, right, nominally we're seeing that oil prices, have dropped, but when you add that the dollar is stronger, when they convert their naira to US dollar, you see that they're pretty much still paying, a higher cost. And that's one of the reasons why we're seeing prices increase. But again, in this market structure that we are experiencing right now, Dangote is a very strong player. And we have seen his prices still, remain at what it was. And what that simply just tells us is that they're still obviously weighing, their cost, and we might see a change in their price in the coming weeks or months.
Yeah, well, it's always good to prepare the minds of our viewers. I believe that's one of the reasons why we have viewership on this program. And still along that, we know that Russian oil now is under the threat of sanctions from the US, even though it doesn't look like India and China are ready to back down. So when we bring that into the picture and look at the decision by OPEC Plus over the weekend, to increase supply by, I think, 547,000. What can we see in the coming days, in the area of pricing of crude?
I think most of it would still be that prices could probably trade around what they're currently trading at. There are chances that prices could rise because of the, sanction on Russian oil. But like you had rightly mentioned, right, the fact that China and India, who are pretty much the dominant buyers for Russian oil, are still very much in the market for that particular commodity. We would likely still see the market react the same way they have been reacting, even when the tariff impositions kicked in on the first of August. The other thing to also consider is how supply would also, how OPEC supply would somewhat coincide with the increase in the tariffs on Russian oil, right? So an increase in supply means that prices would likely be bearish as well. But when you also juxtapose the both of them together, pretty much would most likely would remain around what we're currently experiencing. But when you look at what that means for Nigeria, right? It's extremely important that we look at the oil production aspect for Nigeria, because conversations around oil production are very much more important than conversations around pricing, not because pricing is not important, but because we are an exporting country and also a net importer for refined petroleum products. And so we are seeing that upward trend in domestic oil production for Nigeria. At least for the June figures, we did see Nigeria meet its OPEC quota of 1.5 million barrels per day. If that uptick continues, right, what that means is that we will be getting in more forex, right? And if more forex comes in on the naira aspect, we would continually see the current stability of the naira persist. The issue now, of course, will be the domestic price for petrol, which would most likely retain the upward trend that we are currently seeing. We obviously would see conversations around Dangote's pricing in the coming days and weeks based off of the current developments. And what will most likely change might be the landing cost for petroleum for their own, petrol product, and how that will definitely trickle down in the market. Another thing to obviously mention as well, it would be the price differentiation across different states in Nigeria, which currently exists. We most likely will see that continue. So I'll say that's pretty much how we can look at it for Nigeria. The global dynamics just still points to a lot of uncertainty. All price volatility would persist, but prices would likely remain at what they're currently trading at. And what that means for Nigeria is mixed, pretty much higher government revenue. But
Maybe I would have loved for us to go the way of, the targets and the budget. The budget is supposed to be working on 2 million barrels. We don't have that. 75 dollars. We don't have that. But, I mean, we're almost out of time now. So let's talk about commodities. What's happening to prices? Planting season over? Can we have a little bit of breather now?
Yes, yes, I can actually tell you that. So one thing I'm very happy about, I think almost every time we talk about commodity prices, I always talk about plantain. So I'm very happy that price, the price of plantain would be coming down, more. So yes, what we are seeing the harvest season, effect begin to, creep into the market in a very favorable manner. Tomato prices, pepper prices, even the price of beef as well. So what we are seeing that, positively impact the market, and we expect that trend to continue at least for the most part of the third quarter of the year. There are concerns about higher petroleum products obviously feeding into logistics costs, especially for urban areas. The price of diesel also feeding into, intrastate logistics costs and how that would impact the domestic market. But overall, we are seeing that the stable exchange rate environment, and the harvest season really propping up, putting a green light pretty much on commodity price movements right now.
All right, Dumebi, thank you so much for that. A good one. You are happy for the plantain. I'm happy for the pepper. I'm happy for the pepper, and I hope it will last for a bit. At least we'll store, and have as much
Yes,
as we can
yes.
before the next planting season.
Comes
Anyway,
in.
thank you so much, Dumebi, for your time, and wish you the rest for the rest of the day.
Thank you for having me.